I want to talk about this note that we saw yesterday. PGIM's Gregory Peters said that the markets are going to be very skittish around the Fed as a source of instability. And indeed, yesterday we did see some bond market reaction in the early part of the day. But, and I said this a few times yesterday, we didn't see the bond vigilantes come out by any means in full force.
Right.
Why not?
Well, I think you have to look at what the market thinks is going to be the reaction function of the Fed. And, while there are historical examples of this, after the Fed Accord in the 50s, Volcker came under pressure, Greenspan, we have an example with this president and this Fed chief from 2018. And we were towards the end of the rate hiking cycle, and Trump leaned into Powell and the Fed that they should be cutting rates. And they went into their December meeting and they hiked again. And honestly, it was kind of a thin story for a rate hike, but I think they wanted to demonstrate their independence, and that kind of pushed them over the edge to an insurance hike at the end of the cycle. So the reaction that I think we've seen in the market is really a pricing in of a stubbornness premium. We've actually seen some better performance from the back end of the curve under the assumption that the Fed will not want to look like it's caving to the pressure of the White House. Whether that's right or wrong, we can debate, but I think that's the reaction we've seen so far.
But is the pressure of the White House different in 2019 when the president would just publicly make comments about Fed Chair Jay Powell versus when the Department of Justice
is actively pursuing a case?
Exactly.
Yeah.
That is definitely different. And by the way, who would want to defend their renovations in a court of law? These things always go over, and the
president's experiencing this with the ballroom estimates. It's
yeah. Well, and I think and this was a very difficult one. Given the geography there with the high water table and so on.
People say the asbestos in the old building.
Yeah.
The marble that had to be removed and put back.
Right.
I can say I've been in that building. It's right near the State Department, and it has been under scaffolding for as long as I've been covering foreign affairs and politics, because those buildings are just falling apart.
So they're under fire, and it's not just the renovation, right? It's the Lisa Cook story. It's who's going to be next on the board there, and so on. We're going to have a lot of action. I don't know if we'll hear from the Supreme Court on Lisa Cook or when we'll hear. And we're going to have the Myron reappointment come up at the end of this month. And then Powell, in May. And does he stay on the Board of Governors? And I think, at the end of the day, there is a risk, right, of the Fed caving, of the Fed doing the wrong thing. But I think more likely we're going to see the Fed do what they've been doing. Now, they have been under an assumption that inflation is going to come down to target. We saw numbers today. The inflation looks like it's pretty steady in the high 2s, not 2% area. But they seem guardedly comfortable with that there's a tariff impact, that it will come down, that their policy is restrictive. At the same time, the jobs market, we have job growth, but there is a rising trend in unemployment. Not every month, as we saw this month, but 2 years ago, we were 1 full percentage point lower on the unemployment rate. It has been generally ticking higher. And so, I think the market is comfortable that by the end of this year, you're going to see a Fed funds rate down towards 3%. And I think the question is, though, will you get leadership that can make a compelling story to take it down towards the low 2s? And, that probability is there. I think it's positive. I don't think it's, pushing 50%. I think it's much lower than that. But I think the impact on the market of that in terms of pricing is much higher than the possibility of rates going higher.
You mentioned those CPI numbers. What's your take on that data? Because obviously there's a hole in that data from when the government was shut down and we didn't have numbers and they kind of just moved forward. And people I've been reading from today seem a little bit split about how much stock to put in that number. What's your take?
Right. I think that's true. And I think the notion that you can't, bet your life on one number is magnified 100-fold here. You really need 3-6 months, of data to really be sure of where things are. And frankly, in this cycle, 2023, 2024, there have been periods of time where you've had 6 months that are too low, 6 months that are too high, and it's bounced around. But the markets have kept the faith. Your break-even expected inflation levels in the market are fairly low. The Fed is on a fairly stable course. And I think that what we heard from Powell was, we can't agree on what we're going to do in January, but nobody thinks we're going to be hiking, which I don't think was really reflected in the dots. But I think that sentiment, the rates are going down, is widely held there.
What's the hill that the next Fed chair has to climb? I mean, I don't envy whoever that's going to be.
Right. I mean, I wouldn't, in any case, those are tough jobs. You're making these decisions under uncertainty, tremendous pressure, and obviously much more focused now. But I think it depends on what they're setting out to do. If they come in and they want to go with the status quo of we want to bring inflation down, maybe we can cautiously cut rates, but inflation is well above target. We need to get it down to target while also keeping an eye on unemployment. Do they go that route? Or do they try to change the narrative to this is an economy that could run hotter? This inflation is not a function of a wage price spiral, and wages are in fact moderating. And there is some evidence that slack is building in the jobs market, based on the unemployment rate. So I think if they want to go down that route, it's going to be tough. But I think they will be able to have some impact in pulling the committee that way because there is, evidence.